Holy smokes, everyone. The housing bubble bursting in China is starting to accelerate, and we've just got some new big news to say exactly how this is starting to affect the biggest developer in China. That's right, even bigger than Evergrande. And like we've been talking about on the channel, many other developers or companies that were in good, healthy positions are now starting to be affected by the financial crisis that is already underway. So everyone, in this video, I'm going to go over the latest victim that has fallen to the Evergrande saga and show you that house prices are continuing to fall in China, and also show you what's happening in the credit market because the credit markets are going haywire. So everyone, like always, we don't muck around. Let's get straight into it. Look at this, everyone. China's property crisis reaches biggest builder, Country Garden. Well, hot diggity dog, everyone. Who is Country Garden? What do they do, and why should we pay attention? Country Garden is one of the few remaining large, better quality private developers that has been largely unscathed by the liquidity crunch, even as peers such as Shimao Group Holdings Ltd saw dramatic reversals in their credit ratings. Since taking the top spot from China Evergrande Group in 2017, Country Garden has remained the nation's largest developer in China by contracted sales, and it employs more than 200,000 people. So this is huge, everyone. We can see the dominoes are starting to fall, and if Country Garden goes down, the biggest developer, even bigger than Evergrande, we're going to see some big issues. Like Evergrande, it has relied heavily on access to funding in the offshore credit market. Like many peers that binge on debt to fuel growth, it has the largest pool of outstanding dollar bonds among China's biggest property firms, excluding defaulters, with some 11.7 billion outstanding. Well, everyone, it's looking like every week we're finding out what's really happening in China with their developers, and we're starting to see that they are rotten to the core, just like their tofu buildings. And if we bring up their stock price, we can see over the past year, they have fallen down already 40%. And from its peak in 2018, it is down a massive 62.5%. So I think the smart money knows what's going to happen, and investors know it's just a matter of time before this business gets hit as well. What exactly is happening in Country Garden, and why should we be paying attention to this? Let's have a deeper look, everyone. Listen to this. Some of Country Garden's dollar notes plunged to record lows in the wake of a report that the firm failed to win sufficient investor support for a possible convertible bond deal. Longer dated bonds were trading as low as 69 cents on the dollar as of Friday. And I'll bring up a chart here. We can see here all their bonds are absolutely collapsing. And as I've been warning about in the channel, and as we've been talking about on the channel, China's credit market, the offshore credit market, is collapsing. Yields are rising, and companies aren't going to be able to afford to repay their debts. And the funny thing is, with the lamestream media, when all this news first came out about Evergrande, they're saying, look, this is just one company. It's not going to lead to contagion. It's not going to cause a broader financial crisis in China. Well, the evidence is starting to look more and more like it is. But that's not the worst of it, everyone. Look at this. Fitch Ratings has cut another developer, RNF, to default. The Chinese property developer Guangzhou RNF Properties Co. was downgraded to restricted default by Fitch Ratings following its successful delay in repaying most of a $725 million bond due Thursday. Cue another one bites the dust. Another one bites the dust. Again, why does this matter for you and me, and why do we need to pay attention, everyone? Well, any sign of doubt in the firm's capacity to weather liquidity stress risks may prompt a widespread repricing of other high-quality developers. What this means is all these other developers, and not just developers, other companies that were in other healthy positions, you're going to have a lot of investors that are not going to want to lend to anyone in China because of the credit crunch that's going on with bonds right now. And with more than 3,000 housing projects located in almost every province in China, Country Garden's financial health has immense economic and social consequences. Because what do we know so far? The real estate sector in China is huge. It makes up to 30% of GDP, and 70% of China's wealth is invested in real estate. And when this one industry goes down, the great economic miracle of China will also follow with it. And this is what we're already starting to see. Look at this, everyone. China's home market slump deepens as prices fall for the fourth straight month. So it is no longer me just speculating that the housing market will go down in China. It already is. This happened because the credit crunch in the property sector shows little sign of easing. And this is the warnings the credit agencies are starting to say what could happen to Country Garden in China. Country Garden holds both investment grade and high yield credit ratings from 3 major risk assessors, making it a so-called crossover name that could be vulnerable to becoming a fallen angel. That could in turn raise its borrowing costs and eliminate yet another builder from the dwindling pool of high-rated developers that investors can turn to during the credit squeeze. So to put it in simple terms, a credit score could drop, and that could mean it could become very hard for it to find credit, and they're going to have to pay high interest costs, but they may not be able to afford these costs. So everyone, again, what this means for you and me is the situation in China is getting worse, and it's just a matter of time before we see a major bank or some other financial institution in another country get hit from the losses in China. They are also the second biggest economy in the world, so when they go down, we're all going to feel it, especially global GDP, because China has been a GDP growing powerhouse, so once their growth slows, it will affect growth around the rest of the world. So everyone, things definitely aren't looking good in China's housing market with the developers and the credit market overall, so we have to continue to monitor this situation, but I'll keep you updated every step of the way. Now for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching, I'll see you in the next video.